Welcome back to the exchange. Several big tech names report earnings next week, including Alphabet, Microsoft, Meta, and Amazon. And with the Magnificent Seven under pressure as rates continue their climb, let's check in with what the options market is signaling. For today's edition of Tech Check, Chris Murphy is here. He's Susquehanna's co-head of derivative strategy, along with our very own Deirdre Bosa. I'm going to build the suspense to Chris for just a moment. Deirdre, give us a sense of where you think investors or Silicon Valley are most focused.
So for each company, it's going to be different. But as a whole, and we always talk about this when earnings season comes up, these are such big parts of the broader market that a miss from any one of these four names next week could take, markets down with it. So it's really critical. However, expectations are pretty good. I mean, these companies are more like flywheels. They're platforms with many different businesses, and they're almost seen as defensive stocks in this kind of environment. They've had a tougher second half of the year, but year to date, they're still holding up the best. They've still led the markets higher this year. So different things for different companies, but maybe one thread that will be the same for all four of them is their AI promise versus the economics of artificial intelligence. Two very different things. The first half of the year characterized by the hype and promise. Now it's the economics. Investors are going to look for more signs of monetization, spending. AI is very, very expensive in terms of those compute costs. And for the cloud, the hyperscalers, Microsoft and Amazon, investors want to know that growth has bottomed out, especially for Amazon, and that it's picking back up. And that's related to their AI propositions as well.
All right. So drum roll, please. Chris, what do you see in the options markets? Which are going to have the biggest moves?
Well, you kind of nailed it with the whole defensive argument. So you're seeing a little bit of a flight to quote unquote safety in these names. So the implied moves are actually on the lower end compared to what we usually expect to see because of that flight to safety kind of a nature. If one implied move looks a little bit cheap, I would look towards Meta. It's implying about a 10% move, which might seem relatively high, but if you compare how it's moved the last couple, that's on the lower end. But, the main takeaway is overwriting strategy in those names, selling the upside, saying even if we do come in stronger on earnings, we're not expecting much of an explosive move while there's so many other overhangs going on in the broader market right now. So that's been the general strategy that we've been seeing into these earnings events.
And anything you'd add, Chris, that investors might want to think about, kind of outside risks or just maybe broad market risks?
Well, the Treasury yield and the situation in the Middle East, that's definitely overshadowing these earnings. We're seeing correlations in general move higher. So all these stocks are starting to move together at a time when they should be moving on their own individual earnings merits. So, certainly the worst, fear for one of these names is to have a pretty decent earnings, but have the whole entire rest of the market selling off for something that's out of their control.
All right, Deirdre, quick last word.
I liked what Bernstein said this morning, that Google or Alphabet is the warm hug of big tech earnings. It's sort of the least controversial name. And while it is sort of subject to AI hype and promise and economics, really that advertising model that makes up so much of its revenue remains sort of the thing that long onlys really look to. And it's been more resilient than some of the players like Snap and Meta. So the warm hug, I'll leave you with that, Kelly, a warm hug. How about that?
We went from hugging our employees to now a warm hug. This is just a lovely show. Thank you both. We really appreciate it. Chris Murphy and Deirdre Bosa.